All right, welcome back to Talk Tickers. Today we're diving deep into Benchmark's Q3 earnings call. And let me tell you, this was a big one. The market definitely took notice. So let's not waste any time. Let's get right into the numbers and what's really going on here.
Okay, so let's start with a number that says it all. The very next day, the stock shot up over 8.5%. We're talking heavy volume too. Now that is a loud and clear message from investors. So in this explainer, we're going to break down exactly what got Wall Street so excited.
So here's the game plan. We'll start with why the market loved this report. Then we'll hit the Q3 numbers themselves, the big beat. We'll dissect what's driving the growth, look at the guidance for what's next, and then, the big finish, our take on the next call.
All right, first up, the market's positive verdict. Why did investors react so decisively? You might have seen some headlines talking about a small dip in GAAP earnings, but honestly, that's not where the real story is. The smart money was looking at something else entirely. And here it is. The market was incredibly forward-looking. They basically ignored that little GAAP EPS dip. Why? Because they saw the bigger picture. They were focused on the shift into better businesses, the company returning cash to shareholders, and, this is the big one, real, tangible proof that the AI story isn't just hype anymore. It's actually starting to happen.
Okay, let's move on to the Q3 results themselves, the beat. And really, that's the only word for it. Benchmark didn't just scrape by here, they blew past expectations. Let's start with the bottom line. Non-GAAP EPS came in at 62 cents. Now that might not sound like a huge number, but it beat the Wall Street consensus by 4 cents. That's a big deal. And what's more, it landed right at the top of their own guidance. That just screams strong execution.
And it wasn't just earnings. The top line was just as strong. Revenue hit $681 million, which was a full $20 million more than analysts were expecting. And you know what else? This puts them back into year-over-year growth. So they've clearly turned a corner and are headed in the right direction again.
But look, the headline numbers are great, but this is where I get really excited. The financial health of this company is just rock solid. I mean, check this out. This is their 8th quarter in a row with a gross margin over 10%. That's some serious discipline. Plus, they're spitting out cash, $25 million in free cash flow, buying back their own stock, and their balance sheet is super clean with almost no debt. That's a powerful combination.
Okay, so the numbers are good. Great, even. But the question is, where did all that growth come from? Let's dissect the drivers and see which parts of the business are really firing on all cylinders. So if you look at their revenue mix, you can see it's spread out pretty nicely across some really high-value areas. You've got industrials, medical, A&D, all good stuff. And yeah, the semi-cap business is still the biggest piece of the pie, but, and this is a big but, that's not where the real action was this quarter. The growth engine was humming somewhere else.
And boom, here it is. Just look at these numbers. Aerospace and Defense up an incredible 26% year over year, and medical wasn't far behind, up 18%. This is huge. This is the company's strategy playing out perfectly. This massive growth in these really stable, high-margin businesses completely wiped out the little bit of softness they saw in the semi-cap world. That's how you build a resilient business.
Okay, so that was Q3, a fantastic quarter. But what about the future? Let's get into the guidance and the key themes from the call. This is where management tells us where the ship is headed. And the guidance for Q4, it looks really solid. Revenue is looking stable, maybe a little growth. EPS could see some upside. But the number you really need to look at here is the operating margin. They're guiding for it to go up. That's management telling you, hey, we're so confident in our business that we think we can make more profit on every dollar of sales. That's a huge vote of confidence.
And then there was this quote from the incoming CEO, David Moyes. I think this is what really lit a fire under the stock. Listen to what he says. Improved visibility as a result of our AI wins that are starting to ramp in Q4. He's not just talking about AI as some vague future idea. He's talking about specific wins, real contracts that are starting to bring in money right now. That's what makes it real for investors.
So let's map this all out. This timeline really lays out the whole growth story for the next year and a half. Think of it like a multi-stage rocket. Stage 1 is the AI ramp, and it's launching now. Stage 2 is that continued, powerful growth in MedTech and A&D through 2026. And the final booster? That's the semi-cap market, which is expected to kick back into high gear in the second half of 26. That's a lot of firepower coming online.
All right, so we've looked at the past, we've looked at the future. Now it's time to put it all together. What does this all mean for the stock? This is the next call, our take. So here's the billion-dollar question, right? The stock already jumped almost 9%. Did we miss the boat? Is there still money to be made here? Well, when you look at all the momentum we just talked about, we think this story is really just getting started.
So, given everything we've seen, the flawless execution, the improving mix of business, those clear catalysts on the horizon, we are initiating our rating on Benchmark with a confident outperform.
And here's the why behind that rating. First, our prediction for Q4. We think they're going to come in at the high end of their own guidance, probably around 67 cents a share, thanks to those new AI ramps. We also think the stock has more room to run as the market starts to bake in all that good news coming in 2026. So what should you be watching for on the next call? It's simple. 3 things. First, we need to see clear evidence those AI programs are ramping up. Second, we need to see that medical business keep up its double-digit growth. And third, we'll be listening very closely for any hints that the semi-cap recovery for late 2026 is on track.
And just as a final reminder, this is not financial advice.